right. Welcome back to Financial Clarity for Doctors. I'm Corey Janoff, joined as always by Rachelle Zanden.
Hello.
Hello. And today we want to talk about the world of home and auto insurance because what's more exciting to talk about than that? You've probably seen headlines or seen your own insurance premiums change in recent times. Um, really all insurance between medical insurance and auto insurance and car insurance, it just seems to get more and more and more and more and more expensive every single year. Faster than inflation, I think, in a lot of cases. And sure, inflation's been some of it. With prices increase over time just naturally, and we've seen some more inflation in recent years than in the previous couple decades. But that seems to be tapered down a bit into the closer to the Fed's target of 2% year over year now. Um, but but yeah, it still doesn't ease the pain of having to pay increasing insurance premiums over time. Even if your income's gone up, which income for all income levels has increased faster than inflation since the pandemic, believe it or not. It just we don't really notice it when we see the price tag of things at the grocery store, when our auto insurance premiums are going up by 25%. Um, but anyways, there's a number of other reasons, though, why our home and auto insurances have become more expensive over time. We'll talk a little bit about that. We'll talk about ways to potentially keep those costs in check and other possible solutions out there. But where do we want to start today, Rochelle?
Yeah, I think just some basics on what it is helpful. I mean, everyone's probably looked at their auto insurance policy and their homeowner's insurance policy maybe a little bit. That's kind of one of those things you set up when you get your mortgage and maybe you don't even revisit it very frequently. But there's, a couple of main parts to those insurance coverages, which are like the property and liability protection. So your property protection is like what happens to your car or to your house if something happens to it. Does your insurance carrier give you money to repair it or replace it if needed? So with your auto insurance, you also have like a couple of components to that. There's like collision coverage. So if you're in an accident, and then there's comprehensive coverage for what if something happens that's not accident related. So like if there's a giant hailstorm and my car has a bunch of damage, or if someone throws a rock at my car and it breaks the windshield. Like those are kinds of things that fall under comprehensive coverage. The other really big component of those insurances is liability protection. So it's just protection from lawsuits. It's to provide coverage for like what if you're sued and that person wins. It's to provide coverage for like what if you're sued and you need to pay an attorney. Like that all falls under liability coverage. Really, really important when it comes to like, especially your car insurance, because if you are in a serious accident and people think it's your fault, like you can get sued. That's how we deal with a lot of problems in this country. Like maybe we don't have the resources to just pay for things. We sue people, we make their insurance pay for it, all of that kind of stuff. There can also be additional lines of coverage associated with those two. So, like, there are some things we think are included with our homeowners insurance that probably aren't. So, one of them is flood insurance. If you don't have a separate flood insurance policy, you're probably not protected from flood damage. Earthquake is another good example. Personal property like jewelry and art, like you usually have a certain amount of personal property coverage with your homeowner's insurance. But if there's anything big, you may need a separate line of coverage for those like really more valuable items. The one other thing that kind of plays into this is umbrella liability, which we've talked about a little bit before. So that's like a separate policy, but it's additional liability protection that goes along with those auto and homeowners insurance policies as well. So, you get what you pay for, just like with everything else. If you're paying more for coverage, maybe it's because you have comprehensive and like a low deductible and you high liability limits and all of those kinds of things. But today we're going to talk a little bit about like why have the costs increased so much and how can you potentially look at reducing costs on your coverage in a way that makes sense without like cutting corners where we really need some coverage.
Yep. And some of this is self-imposed. Luxuries seem to become necessities over time. It used to be having a bed to sleep on was a luxury. Only kings and such got beds, and the bed was like a cement slab with straw on top of it,
And it was
versus just
dirty.
laying in the dirt. Now we've got, the memory foam, the dual side heating, cooling mattresses that adjust to your sleep schedule. You got the fancy pillows that conform to the shape of your head contours. And, we take it all for granted. What used to be unimaginable is now just the norm. Um, but we drive bigger, more expensive cars than we used to. Back in 1990, about two-thirds of vehicles on the road were cars or sedans, coupes, little things. Today, 85% are trucks and SUVs. So we like bigger cars, and it's not because we've got bigger families. Like talk to your parents, ask them about their family vacations. They would pile in, the parents and four kids. No one was in seat belts. They would just go four across the bench seat in the back and throw the suitcases on top of the station wagon and go on their road trip. Now, we got to have the captain seats with the screens in the back of the headrest to keep the kids entertained from not let them fight on the road trip. Um, but same with homes. Homes have increased in size over the decades. That I think is slightly reversed in the last year, but not really. It's basically plateaued, if you will. But even though family sizes are shrinking, 1970, the average home size was about 1,500 square feet. Today, it's about 2,500 square feet. We now have more bathrooms than people in a house on average. So it's technology's also gotten fancier. You can control the heat and air conditioning from your phone. You got, heated tile floors. You got, I don't know, the clap lights where you can just walk into a room and you don't even need to
You're
clap
dating
anymore.
yourself, Corey.
Yeah, you can have, what is it? You just walk into a room and it like knows you're
Uh,
there and it turns the lights on. I don't have any of this stuff in my house. I do have the heated tile floors. Those are nice. But
yeah, we have
and
the
so
smart thermostat. We do have that.
supposedly ours is capable of doing that, but we need to like have the heating and cooling company come out and like do something to it to enable it.
Mhm.
So eventually I'll get around to that. But
Yeah,
but
not
yeah,
a big
it's
priority.
all these enhancements that make our lives, more convenient. It also means there's more costs associated with fixing them and replacing them if they're damaged or need to be replaced.
Yep. A lot of what we're focusing on today is increased costs over just the last couple of years, though. So we're focusing in on that because that's what's most relevant to people right now. So some of these longer term trends have increased costs because there's more things that they're insuring. They're insuring a bigger car, a bigger house. So obviously there could be more costs associated with that to the insurance carrier. But just over the last couple of years, like we've looked at a couple of different articles, like CNBC article noted that the price of homeowners coverage increased 20% between 2021 and 2023, and that there would likely be another 6% increase in 2024. So that's going up a lot. Auto insurance rates were up 16.5% from August 2023 to August 2024. So that's literally a 1 year increase. And that was at the same time that inflation was starting to level out. The average per homeowner's premium is about $2,400 per year now, but it's increasing to about $3,000 per year, according to the Federal Reserve in St. Louis. Is that right, Corey? That's where that data came from.
Yeah, I just found conflicting data sources. Some were like 22, twenty four
Yeah.
hundred.
Yeah.
The Fred is saying 3,000 or
Yeah.
about 150 a month.
And then in
Yeah.
some places, it's a lot more. So in Florida, the average cost is like $11,000 because obviously there's a lot of risks in Florida that are associated with weather events and things like that. Average car insurance premium is about $1,500 per year. But again, like these are up quite a bit over the last couple of years. So a few things that we wanted to delve into is just why is this happening? Because I think it's always helpful to understand the why. Like, does this make sense? Is it reasonable? Is it like, okay, they're trying to pull the wool over on us and just make more money? Like, what is happening here? But it seems pretty obvious that there are a lot of reasons behind this and they do make sense. So, insurance companies are really playing catch up because they had a couple of years where they lost money. And these companies are not nonprofit. they are set up to make a profit. And when they don't make money, they then have to turn around and charge more money to make up for the fact that in a prior year they didn't make money and also make sure it doesn't happen again. Like we don't want to continuously be collecting less in premiums than we're paying out in claims. Like that is not the point of insurance. And that's not why they're set up to do business. So they're playing catch up, which leads to like bigger increases because they're trying to make up for the fact that they lost money in prior years and make sure it doesn't happen again.
Yeah, I mean that's bottom line. This is all about money. Like
Yeah.
with a lot of things in life, follow the money, and that'll lead you to the answers. Insurance companies have lost money. A lot of it's due to some big climate events, big storms that have caused some significant damage to homes and vehicles, and it's isolated to a few individual states in a lot of cases, but
Yeah.
which is partly why you're seeing some insurance companies just leave states altogether. It's like, hey, it's just not worth the risk. We don't want to, deal with this, potential risk for us.
Yeah. And
Um,
that makes it harder for them to price coverage too. Like, how do we land on an appropriate price when we don't know what's going to happen? Because it's not like every 6 months we know there's going to be a big storm. Like the frequency and severity of storms are a little bit unpredictable, but if it's just a higher risk that something will happen and we don't know how much it's going to cost us, that's a big deal. When
yeah, I
we're
mean,
talking about,
we
yeah,
just saw two hurricanes about a week apart in Florida pass through.
insane.
And I mean,
Yeah.
who knows? There might be others by the time you actually hear this. So,
Right. Yeah. So the rise in weather related claims has been a big deal, not the whole deal, but it's forest fires. In a lot of Western states, that has become a very big deal. It's hurricanes, it's flooding. Um, and in 2023, there are about 2 dozen severe storms in the United States with $1 billion or more price tag, causing $1 billion or more in damage. 2 dozen. Like that's huge. That's such a huge dollar amount.
yeah, it's insane. And
Yeah.
we mentioned the inflation piece too, just the cost to build things is getting more expensive. Labor costs have gone up. Um, so that just the underlying inflation of that itself, in addition to things being bigger and fancier and more expensive with the tech and everything, like, used to be a fender bender, you replace the bumper, a couple $100, and then you're good. Now it's not just replacing the bumper. It's got a backup camera. It's got sensors. So your little fender bender is now a $15,000 repair when it's all said and done. Um,
Hmm.
which it's a lot for these insurers to take on if they're going to be responsible for paying that price tag.
Yeah. My dad
Rochelle,
was
you have a story, right?
Yeah, yeah, yeah. My dad my dad is was old. Like so he was born in 1938 and he was definitely like the anti-technology old guy. But he refused to buy a car with anything electronic basically his entire life. Like he didn't want electronic locks on his doors. He didn't want electronic windows. Like his second to last vehicle didn't even have power steering. Like because to him, like all of that stuff made it like stupidly expensive to repair and it seemed like they were trying to cheat him. Like they're trying to build these bigger, more complicated cars so that they can charge you more at the repair shop. Maybe like not to that extent, conspiracy theory wise, but very much like, I don't need to do that. I don't need that in my life. Why would I pay for that? One, knowing that then that vehicle is like more costly to maintain. Like, why would I do that? That seems stupid. Of course, he also never owned a cell phone in his entire life. So, you know,
Jealous.
I know, right? He's like, people can track me down if they really need me.
Yeah. I remember my dad telling the story once when I guess he probably was still living with his parents at the time as a kid, but his dad got a new car and getting cup holders in the car was an upgrade. And his dad didn't want to pay the extra, whatever, $100 or $200 for the car with cup holders. So
Oh my goodness. Yeah.
imagine that cup holders were the fancy addition back in the day.
Or like a tape deck, right?
Hmm. Yeah, remember
Yeah.
the tape deck to like CD
Yeah.
player converter? You'd
Yes,
have
I do.
your
Corey, now we're definitely dating ourselves.
yes. I had one. Yeah, my first car, I had yeah, you had to put the little tape with the cord in it in order to play your CDs in my 96 Toyota Camry.
I love
So,
it. Yeah.
hmm
But now obviously we have backup cameras. We have, sensors that tell us if we've driven on a line, which obviously we probably know we've driven on a line. There's,
The car
there's,
steers itself, like it stays in between the lines if you take your hands off the steering wheel.
I have no idea how I lived so long without backup cameras, though, I must say. Like, I just like held my breath in a parking lot anytime I was in a parking lot, basically.
It
Yep.
definitely makes
Anyway,
parallel parking a lot easier. Although now,
for sure.
like, have you seen what's the car I've seen the commercials for where you literally get out, push a button, and it like goes sideways like a crab across the sand to parallel park?
I don't know, but
Like,
I need that car.
yeah,
No, I
Google.
don't. See, now I'm
I mean,
falling into the trap.
yeah, eventually that'll be the norm though, and we'll just have 360-degree turning wheels that can you don't even need to turn. You just pivot and
Hmm.
but
Yeah,
yeah,
I don't know.
it's
Okay.
makes it more
Other
expensive to
reasons.
replace.
There's other reasons too. I think there's a rise in litigation costs. Liability coverage is an important part of your coverage, and it is a big driver of cost. So if there are more lawsuits, more people making that happen, then obviously the insurance carrier is on the hook for more money as well. One other thing that I came across when we were doing a little research for this is just that with prices increasing, there's more uninsured drivers on the road, people who just can't afford it for whatever reason. If 14% of drivers are uninsured right now, that's up from 11% pre pandemic. But that also means that the insurance carriers that are offering coverage have to like charge more for that uninsured motorist line, which is like part of what your coverage is. If you get into a car accident with someone that doesn't have insurance, you need to have protection for that. So that cost has increased quite a bit too, just because there are more uninsured drivers on the road.
Yeah, make sure you maximize your uninsured motorist and underinsured motorist. It's usually the same
Mm-hmm.
coverage, uninsured motorist liability coverage. Most companies will let you get up to 1 million of coverage. So basically, if you're hit by someone who doesn't have insurance, your own insurance company will cover you up to $1 million for damages, medical expenses, loss of wages, things like that. Because odds are, if they don't have insurance, they probably don't have any assets you can go after if you wanted to sue them. And I think, yeah, so 14% are uninsured. I think I read somewhere else that like a third of drivers are underinsured. So, yeah, you see call Geico and save 15% on your car insurance or, go to the general and save money on your car insurance. A lot of that is due to, you're getting less coverage for
Mm-hmm.
your what so it's like, hey, we can lower your rates. Oh, sounds great. Let's get
By
insurance for
lowering your
less.
liability protection.
But is it really an apples to apples policy, or are they actually shaving off some of the features that might be beneficial for you um, in the long run? And we'll talk about some things that you can do that can help you lower your costs. But yeah, we definitely want to make sure, especially for you guys, like we don't want to be penny wise and pound foolish. All right. It doesn't make sense to try and save a couple $100s a year on our car insurance when it means we're potentially sacrificing hundreds of thousands in the event of a incident happening. We want to make sure we've got the maximum liability protection,
Mm-hmm.
maximize that, get an umbrella policy on top of it. It's not expensive. I mean, you can get $5 million of umbrella coverage for probably under $1,000 a year in many cases. Varies by state, but it's not too expensive. So definitely protect yourself wherever possible there in case something does happen to you. And
Yeah,
then
absolutely.
with those other lines, like Rachelle mentioned earlier, I think you need to have separate lines for flood and earthquake and artwork, jewelry. If you have like that stuff, those usually aren't covered by your underlying policy. So, I mean, people in Asheville thought they weren't in a flood zone, and look what happened. So, that might be something, even if you don't think you're in a flood area. Like now, I'm rethinking. I live at almost 4,000 feet of elevation. And we get no rain. Like, is this a flood area? I don't know. Um, but if we get a
It
bad
also probably
storm,
depends. Yeah, it also probably depends on like where your house is relative to the houses around you. Like, are you on the top of the hill or the bottom of the hill?
we're more on the
Like
top
that
of the
kind of
hill.
stuff.
That's kind of what I was thinking.
You're
It's like, all
fine,
right,
Corey. I
well,
mean, now that I've said
are we?
that.
I mean, there is a little bit of hill above us, But, if we get some rainstorm where it dumps 30 inches of rain and then basically a river is running down the street, it might, come into our house, even though we're not at
Hmm.
the bottom of the hill. I don't know.
Hmm. Yeah. Yeah. I think that's something you can talk to your property and casualty agent about too. Like even just asking, hey, I don't live on a floodplain. Like, can I get super cheap flood insurance? If it's like $5 a month, maybe it's like, well, why not? Not
Yeah,
a big deal.
might
Yeah.
be worth it.
Yep. So, okay, we know it's more expensive. What are we going to do about it? Right. And I think that you can't do a ton about it. Like, you're not going to fix it. It's still going to be expensive, but there are some things that you can look into. And the biggest one is probably shopping around. So if you haven't revisited your home and auto insurance in a while, it makes sense to look at it and see like what other carriers offer that's competitive. Like, let's not chop our coverage in half with another carrier and be like, oh, now we're paying less, like Corey was talking about with Geico and Progressive. Like, they're not necessarily bad companies, just make sure that you're getting the coverage that you need. Even if you don't end up switching carriers, if you shop around and you let your existing carrier know that you're doing that, you may be able to get a discount and they may like lower your price and be like, "Ooh, hey, let's look at this more carefully and make sure that, we really have this priced out for you correctly." And they might be like, "Oh, we should have looked at this before." And it's like, "Okay, well, why didn't you do that before?" But fine, whatever, let's do it now. So,
Like when your cable
whether
company raises your rates, be like, hey, I think I'm going to cut the cord. Bless you.
and then they find a magical discount for you. They're
Yep.
like, "Oh, I don't know why you didn't have this discount on your policy before. You totally like qualify for this." Like, "Oh, imagine that." But anyway, so shopping around can be very helpful to potentially lower your costs. So that's definitely something worth looking into. And part of that is like reviewing your insurability. So there's changes over time. Did that ticket that you got 5 years ago fall off? Or are you driving less? Like, mileage is a component of how they price your auto insurance. So, if you used to drive 50 miles a day for work and now you work at home, that's a difference. Like, if you're not on the road as much, you should be paying less for your auto insurance. Did you have kids? If you have kids, generally you pay less for car insurance because they're going to assume that you're driving a little more carefully. Um, have you been claim free for a while? If you haven't filed a claim in 5 years, hopefully that makes your auto insurance price come down, or homeowners insurance. And then there can be things like that with your home as well. So, like, if you replaced your roof, your house is now better protected from lots of different things, and that may lower the cost of your homeowners insurance. So there's lots of different things that you should be looking at with your homeowners and auto insurance policies to make sure that they have all the information. Like, they just might not have updated information. They may have information from 3 years ago.
Yeah. I mean, you can look at making tweaks too. Like a lot of people will have a rather low deductible on their policy. Like you might have a $500 deductible. So it means you have to pay the first $500 and then the insurance company steps in. Well, if you raise your deductible to say $5,000, now you're responsible for the first 5,000 before the insurance company steps in, which means there's a lot fewer things that the insurance company has to cover. You get a rock chip in your window and need to replace your window. Okay, maybe that's $1,000 fix, but most doctors can afford to pay $1,000 to fix their window if they have to. And that'll help take that risk off of the insurance company's books and put it on your plate, which means your premium should go down as a result. So little things like that you can self-insure for if it's not a big risk, and that'll make your ongoing premiums decrease in a lot of cases.
Yeah.
Um,
Lots of times people are hesitant to file small claims anyway because they don't want the price of their coverage to increase. So if you like get a bill for $750 for a car repair and you're like, "Ooh, I really don't want to like submit this to my insurance carrier because like I don't want my premiums to increase," but you have like a $500 deductible. Like, wow, you really shouldn't have a $500 deductible if you're not going to file a claim anyway. Like, it should be way higher than that.
yeah, exactly.
Yeah.
Sometimes you can get some discounts, depending on your employer or if you're a veteran or things of that nature, look for those things. Bundling, it usually is most cost competitive to get all of your property casualty lines through the same company, your home, your auto, your umbrella, your boat, whatever. Um, Now, in some cases, not all companies offer all those coverages, especially in certain states. Like we've seen issues, particularly in California and Florida, where, some companies only offer car insurance, others only offer home insurance, or they offer both, but the car is astronomical. So that can make it a little more challenging. Um, if you have kids, teenagers, make sure that they're being responsible, make them do driver's ed because that can be
Anything you can
less.
do to get them a discount, anything.
Have girls instead of boys because boys are more expensive. Just, I mean, yeah, it's teenage boys are the most at-risk drivers out there. There's nothing you can do about it. And for obvious reasons. Um, but yeah, teach them to be responsible, follow the rules, do the driver's ed, etc. Um, credit score, does that actually help your car
Yeah.
insurance premiums?
Yeah,
There you
that's
go.
part of what they run when they price out insurance. But yeah, credit score is a big part of how they price insurance premiums for specifically for like car insurance. I think maybe a little bit for homeowners insurance as well.
Yeah.
But
Other things, consider moving. If you're in a high cost state, it's not like it's gonna get lower over time. Consider moving to a state with lower insurance premiums. There was a Wall Street Journal article, and I'm sure at other publications back in September or early October timeframe about people migrating out of Florida. Florida has seen a huge influx of people over the last, call it decade, really, since the pandemic has accelerated. No state income tax, more affordable than some of the higher coastal cities. Nice weather if you like humidity. Um, but now, homes are, being listed with no prospective buyers or just sitting stale on the market, et cetera. And some of it's due to home insurance is just becoming unaffordable for many. For the average person out there that has the average home, $11,000 a year is a lot of money to spend.
mhm.
Sure, doctor might be able to afford that, but still, if you could, cut your insurance premiums into a fifth of what you're currently paying by moving to a less costly state, and you also reduce the risk of having to deal with hurricanes every year. Um, I mean, aside from the insurance, sure, if you have insurance to replace your house, you're still out of a home for a year while they're rebuilding it, and it's a pain in the butt and emotionally devastating. You lose all your belongings. So,
Mhm.
um, it's a real thing. I know Ben Carlson, who writes the Wealth of Common Sense blog and is the co-host of the Animal Spirits podcast, and he lives in actually Michigan, I believe, but he hypothesizes that we're going to see migration patterns change based on these weather events, and in the coming decades, more people are going to be leaving the coastal cities in the South and moving to the upper Midwest, where you don't have the droughts and the wildfires as much. You don't have the hurricanes and tornadoes. There's still tornadoes, but not, quite like it is in the, further south. And yeah, just follow the money. Like that's these insurance companies say what you want about climate change, but these insurance companies are in the business of making money, and their bottom line is literally on the line with some of these extreme weather events, and they're saying we have to price for it. So, if they're factoring it in, it's costing them more and more money. Um, it's something that you just gotta be prepared to deal with if you live in those areas, or and plan to be spending more on your insurance costs as a result.
Yep. There's the potential for other solutions, like maybe government intervention. So there's, some areas of the market that are pretty highly regulated, like this is the price you could charge and things like that. And that's not necessarily the case with home and auto insurance, but you could make it similar to like government backed mortgages, which a lot of like lower down payment mortgages are government backed. But if that loan has to conform to certain guidelines, then the lender is protected in the event the borrower defaults on their debt. So maybe, if we had insurance that was like that, where, okay, like we have, a certain amount of like backup within the government, like, okay, you're protected up to like this amount of dollar of claim, but then if it goes over that, maybe it goes into this government pool or whatever, like however it can potentially be designed so that if these big, really catastrophic things happen, the insurance carriers are just not on the hook for quite so much. Um, yeah, so it's complicated, just like everything is, but it makes sense.
Yeah, I don't know if there's really any other ways to curb the costs. It could be like the health insurance thing where you charge more now for younger people, but the older people are capped at what is it, like 3x the younger people rate. You could do something there, but then it just means everyone's rates are going up to account for the more at-risk pool.
Yep.
So unless the government steps in to
That's basically like subsidizing living in places like California and
Ex
Florida,
yeah, which
Yeah.
the people who don't live there are going to be pissed about, their insurance premiums going up. Because right
Hmm.
now insurance is all state regulated and every insurance company has to get their products approved with every state that they operate in. Very tedious and annoying. They have to go to all 50 state insurance commissioners and say, here's our data, here's how we want to price things, and then they haggle and negotiate. And that's where some insurance companies are like, hey, we're either raising it to this price or we're leaving and not providing insurance here because your
Hmm.
state sucks from an insurance business standpoint here. Like, to put it
Your
bluntly,
state sucks.
like it's not worth it for us. This is not a good business model unless we can charge this price point. Or like, we talked about earlier, it's just we don't want to deal with the risk because it's so unknown. It's such a wide range of possible outcomes. So yeah, like unless there is some sort of, government subsidized, government backed insurance deal. I mean, I guess there's like sort of FEMA, but not, it doesn't really help insurance companies.
No,
Um,
it's like disaster relief.
yeah,
It's
so it'll be interesting to see how it evolves. I guess you'll probably hear this episode after the election and maybe we'll know who the president is at that point and who's going to be in Congress and the Senate and I'm guessing I don't know. Have you heard of any of the candidates or politicians talked about insurance companies? I think I've maybe heard some things like, oh, we're going to stop insurance price gouging, but that just is to appease the masses. That's not actually
Yeah, I know there were like
feasible.
congressional hearings about it and stuff like that where they were like grilling insurance companies and
Yeah.
they're like, "Hey, like we didn't make any money. Like what do you want from us?"
Yeah. No,
Yeah.
it's
So
literally
I don't
a
know.
business. Like if you're not profitable, you're not going to stay in business. So you need to
Yeah.
find
Yeah.
ways to be profitable.
Yeah. So
So,
I don't know that either of them have that really on their platform, but
but I imagine it down the road, especially if we continue to see more of these weather events, more expensive repairs on cars and homes and everything, and insurance companies just throwing their hands up and backing out of certain states or, raising prices up and up and up. Like, we'll probably see something happen
we'll see how it goes. I think longer term trends are harder to predict, but
for sure.
so, yeah, do a little shopping around. That's probably the best advice we can give you. Shop, shop, shop. Make sure that they have all of the information they need to make a good decision about your insurability because chances are you're pretty insurable, and you make good money, you have a good credit score. Hopefully, you drive safely. And if you don't, start doing that.
Mhm.
Okay. Thank you for listening, everyone.
See you later.